And joining me now is Peter Hug. Peter, thanks for being with me today.
You're welcome, Alex.
All right, Peter, let's start off with gold's range-bound activity in the last few days. In your note this morning, you said that the 1287 and the 1305 range are what has been the norm recently. Now, 1287 has been what we've seen this morning. It's flirted right on that number. What do you see gold doing right now?
You know, I still think the short-term wedge, the 1287, 1305 level should hold. Worst case scenario, I think if we lose 1287, that 1278 level, which has more significant support, I think will hold coming in over the next few days, especially considering we're coming into a long weekend in the U.S.
Okay, Peter, we have the Fed coming out this afternoon. Now, the weather card, like you said, has been played. Is there any surprises we can expect coming from the Fed?
I continue to see the Fed maintaining course. They don't have the weather card to play anymore. Economic activity, I wouldn't say is bad. I wouldn't say it's great. I think the Fed comes out and indicates that, the economy continues, albeit very, very gradually, to improve. They'll be keeping their focus on their gauges, such as inflation, which I again don't see as an issue in the short term, and possibly any disruptions in some of the other asset classes like the equity markets. And assuming no bad economic numbers coming out over the next few weeks, I think they continue their tapering. I think the Fed is on course.
Sticking with economic indicators, you have flash PMI coming out Thursday. Now, is this something that we can see moving gold at all?
Yeah, I think the market is sensitive to any headline news right now. The precious metals markets, the conviction in the markets is what bothers me. There's very little momentum. On Monday, the market had a chance to show the bullish momentum when it tested 1305, the upper band of our range, based on bond yields in Spain and Italy rising, which again is indicating potentially some issues with the peripheral economies in Europe. But it ran out of steam, and at 1305 met with selling and came right back down. So I'm having trouble seeing the conviction in this market. It could be something as simple as a significant headline event coming out of the Ukraine elections this Sunday, which could be exasperated by the fact that the U.S. market is closed on Monday. So as a trader, I certainly wouldn't be going into this weekend short. So we may see some strength again between now and Friday. Again, I suspect the U.S. market will be pretty much done by early morning Friday as people take an extended long weekend.
Yeah, Peter, like you said, let's stick with Ukraine elections on Sunday. Now, obviously, it's Memorial Day weekend for the U.S., so markets will be closed on Monday. Now, let's say there's some big news Sunday night regarding the elections in the Ukraine. What happens on Monday?
Well, yeah, I think investors need to be careful with the concept of the market being closed. The exchanges in the United States will be closed. The primary banks will be closed. But the capacity to trade will not be. Europe will be fully operational, be making an active market. Europe is a significant market maker in precious metals. So if something significant were to happen Sunday, I would think that the volatility on Monday would be exacerbated because of the U.S. exchanges being closed and less liquidity in the market. But dealers that want to trade will certainly be able to find offset capability with their European counterparts.
Now, let's take it over to PGMs now. We've seen platinum and palladium both rising. Obviously, the strike issues in South Africa are affecting platinum prices, and palladium seeing some uptick due to Russian issues. Now, at the beginning of the year, you said palladium could touch $1,000. Do you still see this as a possibility?
Well, I've been bullish to PGMs sort of in any scenario. And again, that's kind of a strange thing to say, but I sort of lay out the scenario that if there were to be an event that created a surge in the precious metals complex, you would have an upward bias in gold and silver, which would generally also be beneficial to the PGMs. They tend to trade in sympathy to some extent with gold and silver. So you have an upside bias then on the platinum palladium complex. Now you add into that element the South African strikes, which are well into its fourth month. and potential supply disruptions for palladium from Russia, I still continue to believe that $1,000 print on palladium is a real possibility, especially when you add on to the fact that two significant South African banks have launched ETFs in palladium, and just within the last 2 months of their launch are well in excess of 400,000 ounces of palladium in the position. So that again is palladium coming off the market in a situation where supply is questionable. So yeah, the upside is definitely still in play, I believe.
Excellent, Peter. Thanks for coming on today.
You're welcome.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com. Have a good one.